Hey folks, it's Simon here with your Tower Daily for Tuesday, the 8th of October, 2024. The S&Ps had a pretty bearish session yesterday. The tone was negative right from the open, but losses mounted into the close, which is ultimately pretty much where we closed. Now, we're still in the box, all right? We're still trading in this box that I drew on this chart a couple of weeks ago. All right, it looks like we're about to come back and test the lower end of this box as potential support again, with obviously the big question mark, will we actually break through? And look, there is a non-zero possibility of that, and I'll tell you why. Couple of things to look at here. One is if we look at the sectors that have been leading the way up, healthcare, that's broken down. Consumer staples, that is broken down. Real estate, that is broken down. The last bastion of strength, utilities, was the worst performing sector yesterday, down 2.3%. That to me looks like it's about to roll over as well. And we can't really rely on tech at the moment, all right? Because tech is just kind of waffling around. It's not really in an up or a down trend. So if the sectors that have been leading are starting to roll over, that does pose some risk to the market. Just looking at market activity yesterday, all sectors were in the red except for energy, and Nvidia. But yeah, you can see a lot of red on the screen. Yeah, big tech got hammered except for Nvidia. But so did all the other sectors, particularly utilities. Energy was the only standout with crude up another 4% yesterday. Interestingly, a lot of Chinese related plays that have run very hard the last week or so, seeing a bit of profit taking. If we look at crude, you can see that had a surge yesterday. It was up 3.7%. It's now down 2% in pre-market trade. Similar sort of story for copper. That's obviously leveraged to Chinese growth. That had a pretty good run. That's currently down almost 3% in pre-market trade. If we look at the Hang Seng Index, now bear in mind China's been closed for a week. But we had 1, 2, 3, 4, 5 days of trading in Hong Kong, which were pretty bullish, and now Hong Kong is down 9.5%. Why all the doom and gloom? Well, it's because China is up only 4.5% today. Okay, so everyone who's punting on Chinese stocks perhaps just got a little bit ahead of themselves. Now, another reason why the S&Ps could be vulnerable is if we go back and look at what our friends at SpotGamma are telling us, and I'll just bring up the dashboard quickly. We have broken through the volatility trigger. All right, the volatility trigger was at 57.15, and that's a key level. It's a proprietary level calculated by SpotGamma, but when the S&P breaks through that level, it does open the door to increased volatility. Okay, election's only a month away. We could see increased volatility, and we've got some statistics here to back up that idea. Now, if you want to learn more about these SpotGamma tools and how SpotGamma can be used to literally cast a massive flashlight over the market and see things that would otherwise be completely hidden from you, please come along to our free online live training session this Thursday at 10 a.m. Eastern. So click the link in the email or click the link below this video to register, and I look forward to seeing you live on Thursday. Thank you.